Assalamualaikum and hi to Madam Zuraida and all of my friends. So today my group would like to present our answer for FAR610 group project. This group project consists of 4 questions and I, Nufara Akila, will present the first part. Nur Iliana Akila will present the second part, followed by Nur Hanisa and lastly Fizana Hishani. For my part, I will discuss question 1, A, B and C. So for question 1A, we are required to complete the goodwill and bargain purchase on acquisition of XCC, Tayo and Gosan. So for the XCC, we have CT and NCI amount of 453.2 million and the fair value net asset of 444 million. After the deduction, we have 9.2 million of goodwill and we have to minus with the impairment amount, which is 20%, minus with 1.84 and the goodwill amount will be 7.36 million. The impairment amount will be transferred to CSOPL and the goodwill amount will be transferred to CSOFP. Same as Tayo, we have CT of 110 million and NCI of 32.8 million, which have a total of 142.8 million. And fair value net asset, which consists of OSC, pre-ARR, pre-RP and ARR of freehold property 1 million, which have a total of 164 million. So after deduction, we have bargain purchase 21.2 million, which will be transferred to CSOPL. And lastly, for Gosan goodwill. So Gosan have an indirect CT of 42 million. The remaining of 60 minus 42 million, which is 80 million, will be minus in NCI. And the NCI amount is 35.7 million. The total amount will be 67.7 million. And the fair value net asset consists of ordinary share, pre-retained profit, pre-ARR, and ARR of land of 0.5. So the total will be 58.4 million. After the deduction, we have a goodwill of 9.3 million, which will be transferred to CSOFP. So for question 1B, it is required us to compute the gain and losses arising from second acquisition of Tayo. The CT of the second acquisition will be 11.2 million and the fair value net asset consists of ordinary share, pre-RP, pre-ARR and ARR freehold land, which have an amount of 164.8 million and is times with the interest second acquisition 10%, so the amount will be 16.48. And after the deduction, you have a gain on second acquisition 5.28. The amount of interest on second acquisition will be transferred to CSOCIE and the gain on the second acquisition will be transferred to CSOPL. So for question 1C, it is required us to compute group retained profit and NCI as at 30 June 2019. So for the retained profit of XCC, the amount will be 11 million and we have to apportion into 70% and 30%. So the amount for group is 7.7 and the NCI will be 3.3. And for Gosan, we have a total amount of 7.1 and after portion of 56% and 44%, we have a group amount of 3.98 and for the NCI we have 3.12. So for Tayo, it is divided into 2 parts because the proportion of group and NCI is different. So for the first part, the amount of the retained profit will be 0.78 and after proportion of 80% and 20% between group and NCI, the amount of group will be 0.62 and the NCI amount will be 0.16. And for the second part, the proportion of the group and NCI will be 90% and 10%. So the amount of 8.98 will be divided into 90% and 10%. So the group amount will be 8.08 million and for the NCI amount, it will be 0.9 million. So we will also have to compute the investment in association. The cost of investment will be 50 million and the SOPL amounting 2.8 million. The interest of Taliban in NAS will be 30% and which then will show an amount of 0.84 after deduction of impairment. The share of post-acquisition will be 0.79 and after deduction, we have a current value of investment 15.79. The share of post-acquisition will be included in the CSOPL and the holding retained profit, which is in Taliban, and the current value of investment will be included in the CSOFP. And this is for Taliban retained profit. The amount will be 201.63 million, and all of it will be transferred to the group amount. And lastly, we also have to include the NCI amount from the group reschedule from XCC, Tayob and Gulsan. Don't forget the NCI amount from Gulsan, which is minus 18 million, and the preference share from XCC wholly 80 million to NCI, and ARR of Gulsan, which is 0.11 for the NCI portion, and the changes in shareholdings, which is 16.48 million. We have to minus. So the total amount of group will be 222.01 million, and the group of NCI amount will be 244.81 million. This amount will be transferred to CSOFP. So that's all from me. Now Iliana Akilah will continue the presentation.
In consolidated statement of profit or loss and other comprehensive income, all similar items such as sales, income, and expenses will be combined, even though the subsidiary not 100% owned by the holding company. All intra-group transactions are cancelled, and only transactions with party outside the group will be disclosed. The result of operation of the subsidiary during the year will be consolidated from the date it becomes subsidiary. Since the acquisition of subsidiary are made on previous year and earlier of reporting date, the profit of the subsidiaries that form part of current year profit of the group will be taken without portion the profit earned. Based on consolidated statement, profit after tax amounted to Rm 46.99 million. The calculation include impairment of XCC under and over proportionate of depreciation occurred during the year and share of profit in associate. The total of other comprehensive income amounted to Rm 55.24 million. It includes additional increase in fair value of property in Gulsan as at 30th June 2019 amounted to Rm 250,000. The profit after tax attributable to parent are amounted to Rm 33.25 million, and NCI amounted to Rm 13.74 million, which based on working one. On working one table, the profit after tax for the current year of the subsidiary after market adjustment will be attributable to the non-controlling shareholder. The preference dividend paid to non-controlling interests are deducted from profit after tax of the subsidiary, then added back to be included in NCI portion. The NCI portion in other comprehensive income amounted to Rm 13.85 are a sum of profit after tax that attributable to NCI and NCI portion in increase in fair value of Gulsan property amounted to Rm 110,000. The balance of 140,000 of the fair value will be attributable to parent, which give the total of parent other comprehensive income amounted to Rm 41.39 million. In consolidated statement of changes in equity, it shows in detail the change in owner's equity over an accounting period by presenting the movement in reserve comprising the shareholders' equity. The opening balance of shareholders' equity reserve at the start of the comparative reporting period as reflected in the prior period statement of financial position. The opening balance is adjusted in respect of the correction of prior period error only. The balance brought forward for group retained profit, NCI, and group asset revaluation reserve are based on working 2. Balance brought forward of group retained profit amounted to Rm 203.48 million come from balance brought forward of Tayyiban and holding portion in Tayyub and XCC. For NCI, it is amounted to Rm 247 million. Balance brought forward of NCI only include the calculation of NCI portion in retained profit of XCC and Tayyub since Gulsan is acquired earlier of the reporting date. So there is no NCI portion in balance brought forward of XCC. The NCI then will be added with NCI value during acquisition of Gulsan at the date of acquisition. NCI portion in profit after tax and other comprehensive income. It also deducted with indirect NCI value that obtained from indirect holding in Gulsan, dividend paid to NCI, and also the change in shareholding. It gives the carried forward value of NCI amounted to Rm 244.81 million. The carried forward value of group retained profit amounted to Rm 222.01 million, which come from balance brought forward of group retained profit plus with parent portion in profit after tax minus with dividend paid, and lastly plus with change in shareholding. The group asset revaluation reserve amounted to Rm 178.14 million is derived from balance brought forward of group asset revaluation reserve Rm 170 million plus with parent portion in other comprehensive income which is Rm 8.14 million.
Okay, next we will proceed to consolidated statement of financial position of Taliban Berhad Group as at 30th June 2019. Okay, the figure that we get for the total assets and total equities and liabilities is 2,168.26 million ringgit. Okay, next is question 2. Explain term joint arrangement and joint control in accordance with MFRS 11 joint arrangements. A joint arrangement is an economic arrangement whereby two or more parties have joint control. MFRS 11 joint arrangement established the principles for financial reporting by parties to joint arrangements. In accordance with the standard, the following characteristics identify a joint arrangement. A. The parties are bound by a contractual arrangement which can be evidenced in writing, form of contract, or documented discussions between the parties. The terms of the arrangement could be incorporated into the articles, charter, or bylaws of the parties with vested interests in the joint arrangement. Some of the areas covered by the contractual arrangements are as follows. First, the activity, duration, and reporting obligations of the joint arrangement. Second, the appointment of the board of directors or equivalent governing body and voting rights of the venturers. Third, the decision-making process, matters requiring decision by the parties and the required level of support for those matters. Fourth, capital or other contribution by the parties. And last one, manner of sharing among the parties of the joint arrangements assets, liabilities, revenues, expenses, profits or losses. B. The contractual arrangement give two or more of the parties joint control of the arrangement. For joint control exists where the parties contractually agree to share control and decisions about the relevant activities of the joint arrangement have the unanimous consent of all parties sharing control. The parties have to assess the extent to which the parties should act together to direct the activities that significantly affect the returns of the joint arrangement. No single party controls the arrangement on its own, but party to joint control can prevent the other parties from controlling the arrangement. Okay, the next question is, as an accountant of Nisa Berhad, explain whether the argument by directors of Nisa Berhad is correct or not. According to MFRS 11 joint arrangements, a joint arrangement is an economic arrangement whereby two or more parties have joint control. This standard establishes the principles for financial reporting by parties to joint arrangement. In accordance with this standard, one of the characteristics to identify a joint arrangement is the parties are bound by a contractual arrangement which can be evidenced in writing, form of contract, or documented discussions between the parties. The terms of the arrangement could be incorporated into the articles, charter, or bylaws of the parties with vested interest in the joint arrangement. One of the areas covered by the contractual arrangement is the decision-making process, matters requiring decision by the parties and the required level of support for those matters. In an agreement of the joint arrangement between Mesa Berhad, Dinda Berhad and Bina Berhad, any decisions can only be made with 75% consent among the shareholders. In this case, Mesa Berhad and Dinda Berhad each hold 35% of the ordinary shares capital in Nisa Berhad, and thus it did not fulfill the 75% consent as stated in the agreement. Therefore, the argument by directors of Mesa Berhad and Dinda Berhad are incorrect because all three companies have joint control over Nisa Berhad and all three have to agree on all decisions.
My name is Firzana Shani binti Badrul Hisham. I will explain about question 3 and question 4. Okay, for question 3A, explain whether relationship between Gasu Berhad and Impiana Berhad have changed after the disposal. Okay, the answer is after the disposal, relationship of Impiana Berhad to Gasu Berhad have changed from subsidiary to an associate. When the ownership interest in the subsidiary decreases, the relationship between investor and investee may change. When the holding entity disposes part of its interest, yet holds a substantial interest in the investee, thus it is sufficient to exert influence over the investee. Okay, in this case, Gasso Berhad initially held an 80% interest in Impiana Berhad and then disposed 45% of these shares, which now it actually disposed 36%. Gasso Berhad now only own 36% shareholdings in Impiana Berhad. Impiana Berhad is no longer a subsidiary but an associate of Gasso Berhad. Okay, question 3B. Calculate gain or loss on the disposal of the shares for Gasso Berhad Group. Okay, working 1. We want to find the remaining goodwill. First, consideration transferred 58 million plus with NCI 9 million and we will get 67 million. We will minus with fair value net asset at the date of acquisition and less with the impairment of goodwill. Therefore, we will have a remaining goodwill of 14 million. Okay, for working 2, the proceeds we get is 95.8 million plus with the fair value of remaining shares consists of 44% times with 10 million times with 9 ringgit and 30 cent. Therefore, we will get 40.92 million. Thus, we will add these two value and the total is 136.72 million. We will minus with the fair value of net asset 116 million and less with the remaining goodwill 14 million. Therefore, we will get gain on disposal of 6.72 million. Okay, for question 3C. Advise Gasso Berhad on the implication of the disposal with regard to the preparation of the consolidated statement of profit or loss for the year ended 30 June 2019 and the consolidated of financial position as at 30 June 2019. Okay, the answer is, for the year ended 30 June 2019, gain on disposal of subsidiary amounted 6.72 million should be recognized as revenue in consolidated statement of profit or loss. Gasso Berhad should disclose its investment in associates of 40.92 million under non-current asset in consolidated statement of financial position CSOFP. Then the remaining goodwill of 14 million will be written off in CSOFP. The proceeds from disposal of shares amounted to 95.8 million should be recognized as receivables under current asset in consolidated statement of financial position as at 30 June 2019. Okay, question 4. Advise whether Amari Berhad has control over Niona Berhad, May Berhad and Kari Berhad as at 30 June 2019. Niona Berhad and May Berhad are the subsidiary of Amari Berhad, as Amari Berhad has more than 50% interest in both companies, which are 70% and 65%. Thus, Amari Berhad has control over those two companies. Kari Berhad is associate of Niona Berhad. According to FAR610, it defines an associate as an entity over which the investor has significant influence. Significant influence can be defined as power to participate in the financial and operating policy decisions of the investee, but not control or joint control of those policies. In this case, Niona Berhad acquired 25% interest in Kari Berhad, where it is presumed that Niona Berhad has significant influence over Kari Berhad. Significant influence is evidenced by participation in the financial and operating policy decisions of the investee, but not control of those policies. Thus, before the April 2019, Amari Berhad does not have control over Kari Berhad, as it is an associate of Niona Berhad. After April 2019, Niona Berhad acquired another 60% interest in Kari Berhad, which changed the relationship of this company from an associate to subsidiary of Niona Berhad. Thus, after April 2019, Amari has indirect control of 59.5% of Kari Berhad.
I would like to ask a question. Is it necessary for all parties to have joint control in a joint arrangement?
The answer for this question is no, it is not necessary. There could be parties that do not have joint control. For example, 4 parties have an interest in a joint arrangement. 3 of the 4 parties have joint control and 1 does not. The party that does not have joint control is a party that participates in but has no joint control.
I want to ask about question 3. What is the effect of Gaso Berhad if it only disposed 20% of its investment in Impiana Berhad? What is the effect in terms of their relationship? Thank you.
To answer that question, if Gaso Berhad disposed 20% of its holdings in Impiana Berhad, it actually disposed 16% of 80%, which is 20% times 80%, where it still owns 64% shareholdings in Impiana Berhad, which still remain a subsidiary of Gaso Berhad. Impiana Berhad will still be consolidated and have no effect on the consolidated statement of profit or loss. However, the amount attributable to the NCI will increase. Impiana Berhad will still be consolidated for statement of financial position, but the non-controlling interest percentage will be based on the year-end percentage. However, goodwill is retained.